Good morning, traders. Today is the 7th of February. My name is Devil Hornsey, market and YouTrading, and today we'll take a look at the week ahead. Okay, as always, you can start with the YouTrading.com for its heat map. Bottom left-hand corner is green, right-hand corner is turning red. So this euro is the weakest. The Aussie and the Canadian are looking like they're battling out for the strongest. I'm saying this is more of a risk-on start to the week. We're hopefully going to see moves into the commodities and equities and out of the sort of safe haven of the yen. Looking at an economic calendar, see here, there's not a lot of tier one data compared to last week. Obviously, NFP was the focus. This week, I think it's going to be more around this US inflation data, the CPI month over month, and the core CPI. But starting with Monday, we've got ECB President Lagarde. She's going to be testifying in front of the European Parliament, basically explaining why the ECB didn't raise rates in the light of raising inflation in Europe. Then on Tuesday, we've got RBNZ Governor Orr speaking, and this week's is quite heavy for central bankers speaking. So whenever you see one of these guys talking, generally, it's going to affect the currency pair unless they're just reiterating what they said last week. Wednesday, we've got Bank of Canada Governor Macklem speaking, and then FOMC member Mester speaking here. So after the London close, those guys will be talking. So we might have a bit of a quiet day on the USD CAD until they've finished talking. We do have crude oil inventories. So that's obviously a weekly thing. Last week, we saw a bit of a drawdown. So it sort of shows demand, which is good for the economy. But we're also sort of seeing prices of oil rising. We'll talk about that a bit more in a minute. After these guys was, probably finished speaking, we have the US 10-year bond auction, and that has been sort of keeping a lid on the ranges within the NASDAQ and the S&P when they do an auction. So after the auction, that's probably going to then release the equities on those days. So we've got Wednesday and Thursday, we've got auctions. So if you're trading equities, maybe wait until after that. If you're going to trade the oil, you should also be aware of the commitment of traders. So here we have this red line here is the commercials consisting of the producers, the merchants, the processors, and the user and swap dealers. And as we see rising oil, obviously the producers and the commercials, if you like, are going to try and maximize their profits. So the higher this goes, they're going to pump more oil. They're going to try and get it sold on to the refiners and things like that. They're going to try and get the most that they can out of these higher prices. They're generally short in the futures. So as they hold the physical and they see prices rising, then they start to sort of lock in those prices with these shorts in the futures. And if we see them build greater shorts position, then that sort of might sort of signify a peak. Here you can see they started to short more, and then we saw this sort of swing high here. Just looking to see if that happens again. Going back to the economic calendar, Thursday in the morning, EU economic forecast. So we should get to see the euro move after that. If we look down, like I said, my focus is this CPI for this week. I think the biggest move is going to come out of that. And if I just sort of point you to this core CPI line here in orange, you see it's rising. It's currently up at 4.5%. Look to the left. If you compare it to the ISM manufacturing index, these blue shaded lines here are recessions. Obviously, this blue shaded line here was the 2020 recession based on everyone being locked down, like globally. So the big supply shortage here, manufacturing obviously fell off a cliff, so did inflation. Then we had the base effect, and we saw the economy open up quite quickly, and we saw inflation like year over year, especially this core, which is removing of energy and food, which are volatile, that rose rapidly, but so did manufacturing. But if you look to the left, previous recessions, as CPI rose, manufacturing generally came down. The steeper the rise, the steeper the fall in the manufacturing here. So especially around the 90s, as the ISM manufacturing PMI traded below 50 and the CPI rose rapidly, then that was a recession. Similarly, when we had rising CPI or core CPI here back in 2000s, we also had a big decline in the manufacturing PMI, and then that's also a recession. And so for in the 2007, 2008. So currently we've got ISM manufacturing dropping, core CPI rising. If we do get to see manufacturing come down below the 50, then, if this CPI doesn't also start to roll over, then I think we might be heading towards another recession. Unemployment claims here, previous week 238. Now they're looking to see if we get 227. If we just look at the previous news releases, for the not seasonally adjusted initial claims, you can see here the slope has sort of leveled off. But if we go to the seasonally adjusted, we had a bit of a tick up and then it started to decrease again. So initial claims, I think, are going to come lower over the sort of course of time. That seems to be the trend, both seasonally and non-seasonally adjusted. We've got, Bank of England Governor Bailey speaking Thursday night, and then RBA Governor Lowe speaking. So if you're trading the pound or the Aussie, probably best to wait until they've spoken and then return to the pound and Aussie on Friday. Looking down at Friday, we've got the Kiwi might be moving on the inflation expectations, especially if inflation comes in higher than 2.96. We've also got preliminary GDP quarter on quarter for the pound, and down here we've got the preliminary University of Michigan consumer sentiment. So just looking at that. So back in 2021, January, it was up at 79. This year, January, 67.2, a big drop of 15% almost. So the trend is definitely down in terms of consumer sentiment. As inflation rises, consumers don't have as much confidence in the future. They've obviously wanted to buy forward as much as they could before inflation made prices go higher. Now they're probably considering how much money they've got in their back pocket at the end of the month and whether or not they want to keep spending. And it looks like the trend, if you like, is that they have less of a bullish outlook for the future. So just having a quick look at the US dollar itself, I've got 94.6 here, so $94.60 as a significant low. This here, this is a weekly candle, so it looks like a big bearish engulfing candle. Lots of traders will be looking for that to continue. So if it does continue to the downside, we take out the $94 sort of level, then we're looking to sort of remove the liquidity from under these swing lows here. However, market structure is still making higher highs and higher lows. So as long as we don't take out this level here, $94.60, we could quite easily retrace all this, because this was essentially the ECB sort of move. So as the euro rose, the dollar sold off. So I'm thinking, we come back down, found the sort of demand sort of level here. We had this inside weekly candle here. They basically just come down, tested into the middle of that, found support, and now I think as long as we can get above the $96.80 sort of 6 cents, above the H4 resistance, then I think we go up and test weekly resistance around $97 to $98. And as the euro versus US dollar is, essentially the sort of main part of the index, this big move here from the ECB, obviously they've cracked open the door for inflation sort of to be mitigated by some rate hikes maybe this year. But the consensus is still that the ECB are going to keep saying that they're not going to raise rates until 2023, which will then bring this euro back down, back towards the 1.13, which was, you can see like just visually the middle of this range here. So I'm thinking I'm going to try and short all the way back down to the middle. And luckily that's working out at the moment. Obviously, after the ECB President Lagarde speaking, if the euro suddenly goes bullish again, I'll have to close out those positions. All right, good luck next week, and I'll speak to you again tomorrow.